If you earn £100,000 a year in the UK and still don't feel wealthy, this is why it is not lifestyle inflation. It is not poor budgeting. It is the lane you are in. Salary is the most aggressively taxed spot in the whole UK system. The wealthiest, they don't play there at all. Today I'm showing you exactly where the friction hits and how they legally step out. Stay with me because once you see how the wealthy borrow instead of sell, you can't unsee it. The tax cycle. Let's see how the tax cycle works. Take an example of you earning £100,000 salary. Step 1. Income tax. You pay 20% on the basic band and 40% on the higher band. A large portion of your income is taxed at 40%. Step 2. National insurance. On top of income tax, you pay national insurance. Before your money even reaches your bank account, tens of thousands are gone. Your £100,000 has already shrunk significantly, but the tax cycle doesn't stop there. Step 3. You spend it, VAT. You live your life. Most goods and services carry 20% VAT. So the money that was taxed when you earned it is taxed again when you spend it. Step 4. You drive, fuel duty plus VAT. Fuel includes fuel duty, then VAT is applied on top of the duty. That is tax layered on tax. Step 5. You build wealth, stamp duty. You buy property, stamp duty. Thousands paid upfront from income that was already taxed. Step 6. You invest, capital gains tax. You sell an investment, property or shares. You trigger a taxable event, capital gains tax. Step 7. You transfer wealth, inheritance tax. Anything above the thresholds, 40% inheritance tax on assets built from income that has been taxed repeatedly throughout your life. No pause. Your £100,000 salary has been taxed when you earned it, when you spent it, when you invested it, when you transferred it. This is not accidental. The UK tax system is extremely efficient at taxing labor. Salary is automatic, it is visible, it is easy to collect, and that is the key difference. Transition. The wealthiest individuals don't structure their wealth around salary, and that single distinction changes everything. What the wealthy do differently. There are 3 core differences. Number 1, they don't take large salaries. Most wealthy business owners pay themselves modest salaries. Their wealth is not sitting in income, it is sitting in assets. Number 2, they accumulate appreciating assets instead of extracting profits and triggering tax. They build property, shares, businesses, equity, assets that grow over time. Number 3, they avoid selling. This is the structural shift. The tax system largely taxes events, and the biggest taxable event is selling. So instead of selling assets and triggering capital gains tax, they borrow against them. Look at James Dyson, the UK billionaire behind the Dyson brand. He builds wealth in property and patents. Buy, borrow, die. Let's break it down clearly. Stage 1, buy. Acquire appreciating assets. For example, you buy a property for £200,000 with a mortgage. Over time, it increases to £400,000. Stage 2, borrow. Instead of selling and triggering capital gains tax, you refinance at a higher valuation. You borrow against the increased equity. Here is the critical point. A loan is not income. You do not pay income tax on borrowed money. There is no sale. There is no realized gain. There is no immediate capital gains event. You have accessed liquidity without triggering tax. That is the structural difference. Stage 3. Die. When assets transfer, debt reduces the estate value. With proper structuring and professional planning, inheritance exposure can be managed. The strategy completes. Why this works? The tax system taxes income aggressively. It taxes unrealized growth far less frequently, and it only taxes gains when they are realized. So the wealthy avoid realizing gains unless necessary. They leverage instead of liquidating. They access wealth without triggering taxable events repeatedly throughout their lifetime. Reality check. This is not about avoiding tax. This is not about loopholes. This is how the system is designed. Labor is taxed efficiently. Capital is taxed at events. If you live entirely on salary, you sit in the highest friction part of the system. If you build assets and leverage them strategically, you reduce friction. Practical application. You may not be buying 50 million home, but the principle scales. Instead of asking, how do I increase my salary? Ask yourself, how do I increase ownership? Instead of consuming all post-tax income, build assets. Understand the difference between bad debt and strategic leverage tied to appreciating assets. And if you run a business, structure matters, extraction matters, timing matters. The tax system is not broken. It is working exactly as designed. It taxes labor predictably. It taxes realized gains deliberately. The wealthy simply operate where friction is lowest. If you only earn and spend, the system compounds against you. If you own and leverage, it compounds for you. If you found this breakdown useful, subscribe. We break down UK tax, wealth strategy, and business structure clearly and practically. And if you are a business owner looking to structure properly, links are in the description.